So today I want to share with you 4 different stocks that I'm going to be buying more into for the month of May. Now, I have my investing account and I have these stocks already, but I want to buy more into them for the month of May because with the market somewhat recovering almost entirely across the board, it's getting harder to find value stocks where I'm going to get some more growth in the short term. So I want to kind of do a little bit more due diligence, check on some of these stocks and see which ones are worth going for that already are in my portfolio. Now, if you're new here, my name is Dennis, and I talk about apps and services that help people build wealth. And I love using M1 Finance as a platform for me to invest in, and that's where I hold most of my holdings aside from retirement. So let's go ahead and jump into this and talk a little bit more about these stocks. Now, before we go into it, as you probably already know, I am not your financial advisor, so make sure you keep that in mind when it comes to me talking about these. These are based off of things for my investing strategy and also my risk tolerance. So always something to keep in mind when watching either myself or any other content creators out there about their stock picks. So what we're going to do is look at the first option here, and this is going to be with Discover. Now, Discover has taken a huge hit over the last couple of weeks with everything going on. I actually got into Discover a couple of months ago before everything kind of went down. So I got my start around $90-ish, like $80, $90. But as of right now, they are currently trading for around $40-ish. And I still see a lot of potential for them to come back. Now, it could take a little while, and that's okay for me. I am a long-term investor, so I'm not always looking for like the quick turnaround. I'm just looking for the value in a stock where my money can go just a little bit further. So kind of going into this just a little bit here, I'm a dividend investor as well, so I do pay attention to a lot of the things when it comes to dividends. But let's go back to the summary for a second. So their 52-week high was $92.98, and their 52-week low was $23.25. So definitely a huge drop, during the whole crisis and everything going on. But it has recovered fairly nicely just in the short little while that I've actually been doubling down in my investment. And I do plan on seeing more growth in the next couple of months. So I want to, put more into the stock. As far as dividends go, this is a fantastic dividend in my opinion, just because the dividend yield as of right now is 4.70%, with the payout ratio just a little bit above where I personally like it to be, which is around 60%. But with everything going on, I can kind of take that by a little bit there, but the 5-year growth rate is about 12.8%, which is fantastic, especially for a dividend with a decent yield. Especially with once it goes back up, it's going to be closer to around 3%, but having that nice 5-year growth rate is awesome. And then they are right now at a 9-year growth rate. So hopefully they're going to be able to continue to move that forward. So right now they are paying 44 cents a share, and they do pay out on a quarterly basis. Now for me, I own some shares of Discover. So here on M1 Finance, if I scroll down, you're going to be able to see I own 4.82408 shares at an average share price of $36.91. As I mentioned earlier, I got started around $80-$90-ish. So I only had a small fraction of a share, but then I quadrupled down once the stock actually dropped immensely. So I definitely bought a lot into it. Now, I know this is not like crazy amounts of money, but for somebody who's just kind of getting back on the wheels for, my regular investments outside of retirement, I am starting to put decent amount of money into my portfolio to have it continue to grow faster. Now, the next one on this list is with another financial company, and this is with Aflac. So Aflac right now is trading at $37.79. The 52-week high was $57.18, and then the 52-week low was about $23.07. So I think another solid company with amazing overall growth. You can even see in the last 10 years where they've been. And then if you look at their dividend, right now, their dividend yield is 3% with a payout ratio at 25%. So that is fantastic. Their 5-year growth is a little bit lower than what I would hope for, especially being around just 3% even at its current cost. So it's about 7.5% growth for the last 5 years, but they have been paying dividends with growth for 37 years. So that gives me a lot of confidence that they're going to be around for a long time for me. Ideally, if that 5-year growth could have been closer to 10%, that would have been fantastic. But 7.5% 5-year average is at least going above inflation. So right now they do pay on a quarterly basis, and the last dividend was 28 cents a share. So if I go back into my M1 account and click on Aflac, we're going to see here that I own about 1.811 shares. I bought a little bit extra as it went down, and I do plan on, again, buying more for the month of May. So my current average share price is $38.15. So I'm right about where the market is for this stock in general. So Aflac is an insurance company, and a lot of people have actually also been talking to me about insurance when it comes to what's going on with the world right now. And I tell people that honestly, term life insurance is some of the best type of insurance when it comes to protecting your family in case something happens to you. I personally have term life insurance, but I'll link up a company in the show notes down below. You guys can check out quickly. I think you can check out what a rate would be for you if you qualify within like less than 5 minutes. So check that out below. It's honestly worth the time to just see what it costs you to have term life insurance. But beyond that, the next company I want to mention is going to be Ross. So Ross is a clothing store that most people know. So right now it's trading in for $92.54. Their 52-week high was $124.16, and their 52-week low was $56.30. So I have a little bit of ownership in Ross. I think I have one share right now. So I believe overall this company has done amazingly well. They do well during downturns in markets or economies, and then they do really well even during good times as well. I did a video on them many months ago where I think in the last 10 years, if you invested, some money, you would have made some really great returns. And I think they're still going to continue to operate in that kind of sense where your return on investment for this company can be really high. Now, the only downside for them as a dividend investor is their dividend yield is really low. It's at 1.26%, so not a lot there, but their payout ratio is under 40%, which is fantastic, meaning that I can definitely look forward to getting a dividend every single quarter because that's how often they pay. But if you look, they are now considered a dividend aristocrat. I believe just a few weeks ago or so, they actually became a dividend aristocrat, which, if you're not familiar, it's when a company pays out a dividend growth every single year for 25 years. So it's a pretty large accomplishment for most companies to get on that list. And then their 5-year growth rate is at 20.59. So even though they don't pay a high dividend, they do definitely have a good increase in the dividend yield, which is really nice, meaning that once I already am invested, I'm going to get an increase in my dividend pay for already having ownership. But overall, I'm really having this company for a lot of its growth opportunity as well. Let me double check here. Yeah, March 3rd of 2020 is when they had their dividend increase by 11.8%. All right, so if I go into my M1 Finance account here, I can see that I have 1.14 shares in the company, averaging at 89.39. So I'm definitely planning on buying more into this for the month of May. I think they still have room to come back, and then even further past that as well. Now, the next one on this list is going to be Realty Income. So in case you're not familiar with this company, they are essentially a REIT where they are known for paying out a monthly dividend, which is not as common when it comes to paying out dividends. Most companies do on a quarterly basis. This company does a monthly basis. So right now they are trading at $53.19. Their 52-week high was $84.92, and their 52-week low was $38. So right now, I definitely see this as an opportunity for me to buy more. They are definitely a company where they're really in my portfolio for the dividend more so than the growth opportunities. So I have a little bit of a mix in there, as you can see with like Ross and this company. And for me, I definitely would like to buy more into them at this rate. But when they were at their 52-week high, I was definitely not really interested in buying as much just because of the cost and their volatility in the market. So if we go look at their dividends, we can see that their dividend yield is 5.45%. So as you can see, their payout ratio is quite a bit higher, but that's okay because they are a REIT, and REIT have different requirements when it comes to paying out dividends. So I'm okay with that 82%. They've been paying dividends for over 26 years, so they are still somewhat recent in the dividend aristocrats category. Their dividend 5-year growth has only been 4.38%, so it's somewhat a little lackluster in the growth rate, but being around 4 or 5% of a dividend yield, I'm okay with that. So as of right now, their last dividend paid out at 23 cents, and like I mentioned, they are a monthly paying dividend. Now, if I go into my portfolio again and go ahead and take a look at my REITs. So right now they are still quite a bit down for my own personal position in there, which is again why I want to buy more, because the value is definitely there for me. So right now I own 2.2 shares of the company at an average share price of $60.52. So even buying right now, I am going to dollar cost average, but even continuing to buy past that average, if they get back up to that $82, I'm going to also get a little bit of that growth. But definitely with this company, it's all about the monthly dividends, so I can start reinvesting some of that money back into the rest of my portfolio. Now, if you're actually interested in seeing a lot more when it comes to my investing in my portfolio, check out my video right over here so you can keep on learning and growing. Thank you so much for watching, and I will see you in the next video.